Hi. So you're probably wondering, what exactly is our wealth plan process and how does it benefit your financial planning? How does it give you confidence as you navigate the biggest financial decisions in your life? So I thought I would put together a brief video, or as brief as I can make it, because I'm super passionate about this stuff, of what exactly the process looks like for clients who I work with and who are in the same situation as you. So navigating their retirement plans, however they may take shape, and asking themselves some of the biggest and most costly financial questions, ultimately to understand, are we going to be okay? Do we have enough money to do everything we want to do in our financial life wealth plan? And if we don't, what exactly do we need to do to get us there? And that's where the beauty lies in the planning. So yes, it's super important to be talking about things like pensions and ISAs and investments and savings and investing in the stock market, levels of growth rates, all of that stuff. Yes, we will take care of. That's what you'd expect from any financial advisor, to tell you how to invest in the smartest way and to try and reduce taxes along the way. But most importantly, the most important part and the most rewarding part of this process is you will get to understand, are we on track? And we map this as much as we can, save for having a crystal ball, and it would make my job a lot easier if I did have a crystal ball. But without that, in the absence of that, the software that we use to develop your wealth plan is market leading and ultimately will help you answer those questions. So we project your lives forward as much as we can, looking at your incomings, your outgoings, your expenditure, your debts, to ultimately understand, do you have enough to do everything you want to do? And rather than me just talking at you about this, I thought I would bring it to life with an example client. So we've got theoretical clients here. They're not clients of mine. We've got John and Julia. Now, John and Julia, if I drill into some of their information here, you can see that they are late 40s in John's case, mid 40s in Julia's case, and they're starting to think about what their retirement plans might look like. They're starting to build in some of the concrete goals into their financial plan and ultimately want to know, are we going to be all right? Do we have enough? And just to bring this to life a little bit more, we've got a few goals that have been mapping with John and Julia here. So you'll see in the example, they're targeting a retirement spend of 50 grand a year net of taxes throughout retirement, which at the moment they've said to me, we're thinking about retiring at 65. Now, I always take the baseline with new clients is that when you plan to retire, it is often founded upon what you think the answer should be. You've probably heard down the pub or one of your friends saying they retired at 65, so you think that's probably when we should go also. But there's often little science and little data behind this, so we will test that. And in John and Julia's case, can they retire earlier than 65? And if they can't, what can they do now to make sure that is an objective, if indeed that is something they want to do? So in addition to their retirement plans, they've got some fairly exciting goals. In addition to that, you can see that John is targeting a sports car, and Julia also is thinking about things like making gifts to their eldest daughter Martina for a wedding. They also want to make sure that they've got Alex and Martina through university without that having any issues on their financial plan. And you can see the headlines here. We get an immediate validation or indication as to whether or not they are on track to meet those objectives. And there is some pressure regarding their retirement spending, and there's also some pressure regarding the sports car purchase. Now, without going into too much detail here, the headline information we have is that John and Julia, they're both still working. Julia earns slightly less than John. She's self-employed in her own business and has salary from the business, no dividends at the moment. And in John's case, he is a fairly senior member of the team within an architecture firm and earns quite a lot, and as a result pays a significant amount in taxes. Now, they've got all the usual financial plumbing, as I call it, the stuff that really shouldn't be too stressful in your financial plan, but lots of people focus too much on this stuff. And things like, should we be pension? Should we be ISA? Should we be paying off our mortgage? The wealth plan process will answer those questions and give you confidence as you navigate those questions. But all you need to know for now is they've got a rainy day fund. They've got stocks and shares for both of them. They've got junior ISAs for the kids. John's got a general investment account that he dabbles in. He's not really sure if he's paying more in taxes in that than he should be. Should he be subbing that into his ISA? Should they be paying into pensions? So at the moment, they've got in their pensions, John's got a workplace money pension pot that's been built up over his career, as has Julia. And they've also got, obviously, the state pensions coming in, and we've obtained some state pension forecasts, and they're on track to get their full state pensions at their relevant retirement ages. They've got a mortgage over their family home, another 2 or 3 years left on that. They're starting to think about, should we be making overpayments to the mortgage, or should we be using some of our surplus income towards pensions or ISAs or other investments? So these are the questions that I know clients have, and these are the things, sadly, that keep people up at night, and that's where a good financial planner can come in and take away that headache for you and give you peace of mind. So it's all very well going through the boring fundamental data, but if we flip me over a little bit and get me out of the way, then what we can actually do here is we can run the graphs to understand exactly, are they going to be on track? Now, if I was to look at this from the perspective of their cash flow to start with, if we hide everything, and what you see on the graph is a varying line here with various spikes in expenditure depending upon their goals. So we've got John's sports car that he's hoping to purchase when he is 55. We've got the expected gift for Martina's wedding a couple of years later. We're funding the kids through university at the moment. And we can see this is typically how we envisage their pattern of expenditure to play out. They're typically, as things stand, going to retire when they are 65. Julia's a few years older, so she's retiring a few years later, which of course is going to cause some issues in the household. So we always try and bring retirement dates into tandem so that they both retire at the same age. But as things stand, this is just the base scenario that clients often come to me with. Their understanding of what they think is affordable, what they think is doable. And that's when the joy and the real passion I have for my job and helping clients like you is we can then test those assertions and ultimately try and improve the position. And yes, you'll invest in a better way, you'll reduce taxes, but the benefit of all that is it can have a tangible impact on your financial life goals. So in John and Julia's case, it could mean for them retiring earlier than 65. It could mean John being able to buy his sports car. It could mean confidence about gifting money to their eldest daughter for her wedding. Again, it brings validation to your life goals, and that really is what good financial planning should do. So in this case, we can see this is their mapped expenditure over the course of their life. Now, we never know what's around the corner. We're projecting over vast timeframes here, but that is where the peace of mind with ongoing financial planning comes in. Is at least once a year we will get together to revise everything and make sure that if you've got some changes to your life goals, for instance, John and Julia could sit down with me in a year's time and say, we've had a health scare from one of our family friends, we're not working to 65 anymore. That is not palatable. 60 is when we want to retire, make it happen. Or they may have had a new goal that's materialized. Perhaps John no longer wants a sports car. Perhaps they want to instead go on a once-in-a-lifetime holiday ahead of retirement. Perhaps they want to stagger down their working hours into retirement. Again, your financial life plan will be as unique as you are. The ultimate thing that financial planner can help with is translating all of the complex financial stuff into that life plan and bringing your goals, hopefully, to life. So John and Julia's case, these are the outgoings. We need to fund them some way. They've got employment income coming in over the next few years leading up to their respective retirements, and they've got state pensions coming in later years of retirement. But beyond that, to meet this red outflow, they're going to have to rely on any investments, pensions, ISAs, cash they might have to fund this outgoing. So we can see here at a very high level summary for now, they may have to rely on pensions, savings, investments to try and meet these gaps. And even when accounting for all that, you can still see we have some red on the graph. And I hate red. Red should not be there in your financial plan because it means there's going to have to be some decisions made about limiting what you want to do with your wealth. So that could mean the difference between retiring when you want to and retiring when you have to. So the first step I do with all clients when we're constructing your wealth plan is we want to remove this red from the graph entirely. And the benefit in the planning is trying to work out, how do we do that? Can we do that through trying to save taxes? Can we do that through investing smarter, perhaps reshaping what you believe is risk when it comes to investing? The greater risk, as I say to all clients and in nearly every episode of my podcast, is the greater risk is not investing in the first place rather than investing. So we'll help to reshape your views, your preconceptions, and any feelings you have around investment risk. And ultimately, the benefit of all this is it could mean the difference between you meeting these goals and not meeting these goals. It really is as simple as that. And if we go to John and Julia's asset position, so we've looked at their cash flow, and we can see here that if we strip out the family home, which is typically not an asset or a liquid asset for this purpose, we take out the kids' junior ISAs because they are technically investments held for the kids. You can see here that their wealth will run out in their mid-70s, which means their retirement goal that we brought to life earlier is not able to be met. So we then need to do some of the fun stuff and make sure that that goal can be met. Perhaps one of the reasons that this is not working out for them is they're paying more in taxes perhaps than they should be. And the software that I use for clients to develop your wealth plans will look at taxes as much as we can through the lenses of income taxes, capital gains taxes, and inheritance taxes to make sure you're paying the right amount of tax now and in the future. We can see in the years of their working lives, they're paying quite a lot in taxes. Again, out with the scope of this video for me to explain why that is and what you could do to reduce that position. But we can see in later years of retirement, they're still paying quite a lot in taxes because of some inefficient drawdown strategies that they're going into retirement with. So ultimately, when we develop your wealth plan, we can't make taxes disappear entirely. We can reduce them often to a more palatable level, but it's about doing this in a constructive and planned way so that you reduce the lifetime taxes you might pay. And reducing taxes means you keep more of your returns in your own pocket, which ultimately means you're more on track to meet these life goals. So again, I could go into so much depth here with this video, but the benefit of constructing your wealth plan in this way is it gives us lots of confidence to run certain scenarios to understand exactly if you're not on track to meet your goals, what do we need to do to get there? So there's tons of insights that I could be running for John and Julia. You can see a number of them here. We could model what the impact of a market crash might be. We could understand how much they need to save annually up until retirement to get them to meet all of their life goals. We could also try and understand what level of financial return do they need to get from their investments in order to meet their life goals. So if I was to look here at, for instance, the scenario that looks at the performance of their investments, if we run this, we can see ultimately that they're not on track at the moment. They do need to achieve a higher level of growth in their performance of their investments to achieve their financial life goals. And we can nudge this up as much as we can and as much as is palatable to take risk for you as end client to ultimately understand, can that get us over the line? Can that eliminate all of the red in the case of your financial wealth plan? The other thing I will just bring to life here, this is a super useful analysis tool that I use with almost all clients who are planning for their retirement, is we understand exactly how much can you afford to spend in retirement. So we structure things in a tax efficient way, but also give you the confidence to know this is how much we can be withdrawing from our pots every year and not run out of wealth. And we can see here the analysis as things stand has taught us that they can roughly spend about £43,000 a year, which you might recall is below their objective of £50,000 a year. So that illustrates that there's some planning we need to do in the interim in order to get John and Julia over the line to meet those goals. So there's tons of analysis we can be running on this. Again, it's probably out with the scope of this video, but what you need to take from this is there's valuable insights that we can run on your financial plan as things stand at the moment. We can identify where the financial mistakes are, where you're paying too much in taxes, perhaps where you're not investing in the smartest way. Both important, don't get me wrong, but the most critical part of developing your wealth plan is ultimately giving you the confidence to know, can we do everything we want to? And give you the peace of mind and confidence to spend down your money, to enjoy the money you've worked hard to accumulate in retirement without worrying we're going to run out, without worrying we've got enough, without worrying you're paying more in inheritance tax than you might need to be. Again, that comes into the plans that I create as we try and find that balance between you enjoying your wealth as much as you can, but keeping an eye that we're not paying any unnecessary levels of inheritance tax for the next generation, for your loved ones, for your family, for your friends. So a good wealth plan should bring all of this to life and bring peace of mind to your financial planning. That is ultimately what I want to achieve as your financial planner. So hopefully this is helpful as a starter for 10, just to let you see what exactly I mean when I'm talking about developing a wealth plan for clients. And a lot of financial advisors will sit down with you and they'll go straight in with pensions, ISAs, investments, how you should be investing. Should you be investing in equities? Should you be investing in bonds? What does risk mean? We'll do all of that stuff. Do not get me wrong. I'm a fully qualified, chartered and certified financial planner, so you know you're in good hands with that kind of stuff. But this stuff here, developing your wealth plan, is really what gets me out of bed each day, and the reason why I absolutely love what I do and love working with clients to meet their financial goals. So if you've any questions regarding any of this, ping me a message. There's no such thing as a silly question when it comes to your money. And hopefully this has been helpful as a starter for 10, just to give you some insights as to what exactly the financial planning process looks like. Thanks for your time, and I'll speak to you soon.